Hey everyone, this is Rob Keens with goldsilverpros.com. We have a very special first-time guest to the program, Gregor Gregersen, who's the founder of Silver Bullion. How are you doing today, Gregor?
Very good. Thanks for having me.
So wanted to have you guys on the program. I've been a customer of yours, your bullion storage product on the website, silverbullion.com.sg, and have been pretty satisfied with the service that you have provided, and wanted to talk to you about the storage industry and get some clarification on that. As you know, there's been a lot in the blogosphere, Twitter, and social media about the various ways that you can store metals. And so wanted to have some industry experts on to talk about that and explain what the different ownership types are so that we can educate the market and so that we set clear expectations for what people should expect when they're looking for a place to store their bullion if they don't want to store it at home. Before we get into that, though, I wondered if you would give us a little bit of your own background and how you got into this business.
Yeah, sure. So for me, my background is financial initially. I got a bachelor in economics, one in finance. Ended up working for some stockbrokers, figured out it's mostly a sales job, didn't like it so much. So I ended up working with quants in structured product desk of banks, working with derivatives. I was more interested, but then I moved into software development and really liked the software side of things. So really ended up becoming a software and financial sort of guy, building data structures eventually. And the way I ended up in precious metals of all things was because in 2008, I was working for Commerzbank, a big German bank in Frankfurt. I had already moved to Singapore at the time, but they sent me as an expat back to Germany. And Lehman Brothers went bankrupt. And it was a big watershed event. And I was basically sitting, in the middle of the trading room, seeing the aftermath of the Lehman Brothers bankruptcy. And I really got to see how fragile our whole financial system is, because it's all based on trust. And once one bank doesn't trust the other bank, it all falls down like a house of cards. Once you look at the amount of leverage in the system, the amount of debt, and you see how it's just becoming more and more and more and more. I had this aha moment. And it was a moment when, I guess to some degree I knew it intellectually before, but that experience really made me realize that the system really is going to collapse at some point. And I want to find a way to preserve my own wealth and maybe have other people, similarly minded people, preserve their wealth in a way that's independent of the financial system and of what I call systemic risk, where systemic risk means can be hyperinflation, can be nationalizations of gold, in the US or Europe. It can be mass bankruptcies of banks, any of these things, anything that's messing with the whole system as we know it itself. I want to find a safe way of maintaining that wealth and be on the winning side of the wealth transfer when that happens. And I happened to read the book by Mike Maloney, Investing in Gold and Silver, and that left a deep impression on me. And, after reading that and, seeing people running out and buying gold and going to a gold dealer in Frankfurt, and especially wanting to buy silver, and them unwilling to sell anything, because at the time silver was falling. If you remember, it was actually going down to $9.50. Nobody would sell you physical. And that's when I realized there's a huge discrepancy between the paper price and actually being able to physically get a hold of the metal. And that's all about counterparty risk. And, that's when you start to realize that wanting to look behind the curtain and look a little bit deeper and realize what is it am I owning? Am I owning an IOU, which is backed by an IOU, with an IOU of somebody else, which is backed by 2% worth of silver, which means if the bank goes bankrupt, I'll never have anything. Or am I actually holding the physical bar of gold or silver? Because if I cannot get my money out of the ATM, that IOU is worthless. And so that was the moment when I basically decided that I will be finding a way to own gold and silver. And when I moved back to Singapore, there wasn't a good way of finding it because there was no silver dealer. I was able to get gold but not silver. So I said, well, let me figure out how to get it, import it into Singapore, set up a company. And if I couldn't sell anything, it was okay. I just would do it for myself. But then I said, okay, I'll build a website It's my background anyway. So live pricing, live inventory. And if somebody would buy, I'll meet them at the train station, tell them, 3 bars of silver, and they will give me $4,000. And because I was the only one in Singapore who had silver at the time, that's how Silver Bullion started, from very humble sort of beginnings. Mm-hmm. But it was sort of a test to see if anybody else was interested. But, from the start, I think we didn't go into this business because we happened to be in it. We went into it with a very clear objective of creating what I call systemic wealth protection, making sure that somebody's wealth is well protected, and strategically, Singapore is the right place, physical gold and silver is the right place. And I saw it as my mission to create a way of storing it, which is so transparent, and said I wouldn't sort of be reducing the value of physical ownership and the Singapore jurisdiction, so there wouldn't be creating any appreciable counterparty risk to make it less valuable, to basically make the most transparent and secure system possible. And so we spent the last 12 years basically building that.
Mm-hmm. So you mentioned counterparty risk in the banking system, since you have experience there. A lot of banking is built upon trust. It's, you walk into the bank, it has the granite walls, and you're just assuming that bank is solvent. And of course, we saw in 2008, the mortgage market and the banking system was much more fragile than people probably had understood. Do you think that counterparty risk is overall rising in the banking system? Do you think we've recovered from 2008? Do you think we're in a better or worse position? I just wanted to get before we get into the actual product that you have, I just want to get your view on the market right now. Are we safer than we were before, or is it riskier? What do you see?
I think it's much worse. I think the first thing to understand is, maybe from a more macro point of view, the whole system is based on trust. The value of the US dollar is based on trust. If you print too many US dollars, if some people start stopping to accept it or prefer something else and starting to move out, other people might do so as well. So it's like people watching a movie, right? And there's one guy running out of the theater. And people go, well, that's a crazy guy, don't think much about it. But now 3 people are running out. People are getting a bit worried. Well, if 8 people get up and run out, chances are it's like a 9th person. He doesn't know why, but he's going to be running out too, just because maybe there's a bomb, maybe there's a snake, maybe something, it's like they're not certain about it. So, and when the 9th guy runs out, there's going to be a 10th and 11th and the 12th, because everybody in that theater is going to have a certain number of people, which is going to cause them to run out too. And then you have a mass panic. So I think when it comes to trust into these macro objects, it's not a stable system. It's sort of a system which can go into a critical state very quickly once you go past a certain threshold. And that's sort of what we've seen back in 2008. And it was sort of a wake-up call because, as the banks put it, if you didn't bail them out, they would have gone bankrupt. And what you have to understand with risk is, if there's Bank A, on paper, they have very little risk because they're saying, I'm having a short position on the security with Bank B, and they're having a long position with this Bank C. And, if I combine all these risks, then maybe my risk is very low. And now I'm combining some other products together, and I'm having this really complex derivative. And the derivative market is huge. I mean, we're talking over a quadrillion, and it's so complex, nobody really understands it. And so the problem is, if the risk, if everything is okay, is, relatively small according to the bank, once you take out one bank, suddenly the risk of the other bank becomes huge, because now the positions are not covered. So it might cause another bank to go down, which then basically causes the whole system to become unstable. So I kind of equate it to being a ball, on top of a mountain. If you, or a ball, and you shake it, that ball is going to fall, and it's the risk is that the thing is going to expand and expand and expand. It's not like being inside a ball, where if you shake it, the ball will eventually come back to its status. And so what we are doing as we create more leverage and we're creating more interconnectedness, we are essentially creating more and more potential for that systemic crisis happening at some point. And, we're talking about the banks, but I think the insurance companies are in a much worse position, because if you look at an insurance company, your job is to take in cash and make a promise of a payout, especially with life insurance and so on, over time. And so what happened is, with the bank basically making interest rates almost zero, these banks don't really, these insurance companies don't have a good way of fulfilling the promise, other than taking riskier and riskier bets. And if these bets go the wrong way, again, you're going to have a huge risk. So there's so many different shocks and problems that we're going to face, over the system. So it's not so much a matter if, but it's a matter when something really bad is going to happen. And I don't know when it's going to, honestly, I thought it would already, something would already have happened. It always takes a bit longer, but it's something that's going to happen, I think, this decade. And I just want to make sure that when that happens, we can protect yourself against that, regardless what it is.
Yeah, I agree with you. And I've been talking to a lot of people in the industry, not only about the precious metals, but about the overall market and the health of the market. And I've made some friends with people who are going to produce a movie. I'm not ready to advertise this yet, but I'll be assisting with getting, funds for the movie. But it's going to be talking about the financialization of the economy. And one of the points that one of the producers was making was, what we see now is we see the algorithms, the software, saying if they see an increase in your market cap because you're either able to drive up the share price or take on more debt, that makes you look more attractive from just a very basic financial perspective, your price gets bid up. An example would be Tesla. Tesla doesn't make a lot of money. They just started making some profit, but their valuation is so exorbitantly more than what their profit making potential is, or their value proposition in the market is. And that's what's happened to everything. It's being financialized. So it's a set of software metrics programmed into a computer. That computer is making relatively basic decisions about that, which is driving further trade. And so what's happening is we're being driven more, especially in our passive investment vehicles, into riskier and riskier products. And at the end of the day, when that system does collapse, the people collectively are going to have a tremendous amount of risk that they're absorbing. And so that's a lot. Seeing that over the last 10, 12 years is what made me want to get into the precious metals, because it ultimately, in physically held form, they have no counterparty risk, and then their ultimate safe haven, gold and silver both. And I think silver is in that category as well. So fast forward now, we're in 2021, and over the last year, there has been a lot of concern about ownership of the physical precious metals. There are a lot of derivative products out there. There's a GLD and SLV. There are ETFs, and there are also different types of ownership if you're wanting to store it somewhere. And that's really what I wanted to bring you on to talk about. So if you wouldn't mind, I know you have your view over what the different types of ownership are. Can you break that down for the audience so we can get some clarity when they're going out to the market, what the different types of ownership are?
Yep. I think the first thing is to say there's not a lot of legal standards out there of what means what. And there's a lot of marketing and misconceptions, or sometimes words are used in the wrong way on purpose. So, when we're talking about fully allocated, segregated, these terms, they don't mean a lot because every party might have their own interpretation of what that means, even ownership. Now, ownership is something very clear because the way we look at it, it's a legal definition. And that's a very clear definition, and we can get into it soon on what that means. But a lot of companies, which I think definitely you're not an owner, they say, oh, you have ownership. Just like a bank account, bank might even tell you, you own that money in your bank account. No, you don't own it. You're being owed that, but it's money of the bank. So if you use that word ownership, give people an impression, a feel good, sort of warm, fuzzy feeling. But the question is, do you really legally own it? And I think that's the most important thing, is clarifying that. Then if you don't, if you go into the IOU systems, which IOU is not necessarily bad, it's advantages to it, but you have, let's call it a fully backed type of gold, whereby if you get $100 from your clients, you're buying $100 worth of gold. But then you have to look at, is that gold held just for the clients? Or is that gold held and used for some other purpose on top, which means which just means it's encumbered. And once it's encumbered, other parties have claims to it. So it's something very different. And that's something that most people are not aware of, that people need to be sort of look potentially into. Then you have unallocated systems, like comics, for example. Only about 2 or 3% of the net long positions of comics actually have silver behind. So then you need to have a system of how to make sure that, who's going to get the silver if you really want to get it, or can you? And then you have, the pure paper products where basically you're just buying price exposure and you don't have any silver behind it. And you will find that almost none of these storage systems are a ownership-based system. And that's what, I wanted to focus on, because I think it's really important for people to have an ownership of it, because if you're a legal owner, say a holder, the agent who stores it for you, they cannot encumber it. And encumbrance is something that really robs you of, a lot of the benefits of owning gold. Because if that as an entity has promised that gold to somebody else, and the question becomes, is it yours or is it not yours? So I would say there are basically these 4 ways that gold can be, or silver can be held. And with a fully owned back gold system, you have to look into this encumbrance sort of issue.
Yeah. So let's talk about some terms and put some terms out there. We have unallocated, we have allocated, pool allocated, and then we have allocated, what I call allocated and segregated. So that would be unencumbered, maybe in your terms, because the metal is allocated to you, and that specific bar and or coin is yours. It's either in a tamper-proof bag or its own safe box or storage, and that's yours. Can you explain, in your terms, what does unallocated mean? What does allocated mean?
Well, you see, I just had a conversation last week with the World Gold Council. They're creating some definitions on this, and I was telling them the problem is that whatever definition you have, somebody else is going to use that word and not follow it. Mm-hmm. And therefore it becomes meaningless. So ideally, I would do away with all of these terms. And I would basically say the most important thing, categorization, is, are you a legal title owner or not? And that's very easy to determine if you know how to look at it. The first thing you have to realize that you can only own a physical bar. Now, maybe to take a step back, the beauty of physical bullion is that it can act like a financial product because it's very liquid. You always know what it's worth. But it can also act as private property. And so what we are doing is we are making sure that when you're buying it, it's your private property. But if you think about it, you cannot buy half a bar. You have to buy the full bar. So any system where you can buy a certain number of grams, or which are fungible, where you can buy $100 worth of silver and so on, by definition, you're not an owner. By definition, that bar what you're buying, it's owned by somebody else, and he's owing you something. It's an IOU-based system, because you can only own a full-sized unit bar. So already that's telling you you're not an owner if you can buy fractions. Now, the way you become an owner is very simple, actually. You have to uniquely identify that bar. You can only own something if it has a serial number on it, or if it's inside a temp evident bag with some number, so it can be uniquely identified. Because if somebody tells you own 500 make-believe coins, well, which ones? So if they're not identified, it's always going to be an IOU. So you need to have a serial number as a way of identifying it. And then that serial number with that bar needs to be sold to you with an invoice. Now, an invoice doesn't sound very sexy, but it's a fantastic document, because it means that that specific gold bar or silver bar just went off the balance sheet of the dealer, and it became your private property under the laws of the jurisdiction you're operating under. So in our case, it's Singapore. Now in Singapore, if you falsify an invoice, it's a criminal offense. It's not a civil offense. So as a customer, it's giving you a lot of advantages because you now know that under the law of Singapore, this bar is yours, which means that if something happens to us, say we go bankrupt, our creditors cannot get that bar because it's not on balance sheet, it's yours. You see, so it's really protecting you. At the same time, if we were to grab that bar and run away, it's called stealing. Whereas if we had that bar in our name and we owe it to you, and sorry, we're going bankrupt, that's just a civil issue. You see, so again, you want to be the physical private owner of that bullion. That's why with our system, we basically act as an agent who sells the bullion to you with an invoice, which means you become legal title owner of that bullion. And we are just an agent who stores it, provides insurance for it, and provides liquidity. But it's your property. Now, to build a system like that, it's much more complex than an IOU-based system because I have to keep track of about 40,000 parcels, 40,000 bars and so on that we are storing now for clients with a history on each one. And that's where my software background, was really useful because we developed all these systems because the industry doesn't work like that. I also need to be able to retrieve that bar wherever it is. So it takes about 3 times more storage space to be able to access each specific bar instead of just giving you the next bar which is lying around. And it creates a type of transparency, which means I have to keep track of everything, and I cannot just give somebody else some bars and some bars here, move something in. I now become responsible to show the history of everything. So I'm putting a lot of burden on myself in order to create all of this transparency. And I'm not doing it because it's a great sales argument, because most people don't understand this in the industry. And that's why I keep on telling people it's important. And I'm putting a lot of work on it into it. And I'm doing it because it's the right way of doing it, because I want to create systemic wealth protection for our customers, not just, the easiest and simplest way of doing it. So, but to get back to your original question, you need to have an invoice. If you have an invoice that says on the 5th of April, you bought bar number 7255 for $58,225, and that's your property now in your name under Singapore law. Now you can be sure that there's no way for us to encumber it. We cannot lease it to somebody. We cannot sell it to another customer because that serial number has to be there. And in our system, we have auditors coming 4 times per year. 3 times is Bureau Veritas. Once it's Ernst & Young coming, physically counting and checking these bars by serial number to make sure they're there. So that's the level of transparency we create. And so that's ownership. And unfortunately, there are very few companies which follow this. And you will find companies which have very non-transparent systems, don't have any ownership type of stuff, and they will claim that they're giving you ownership. They will claim that they have segregated parcels or fully allocated or things like this, but that's because these things are not well defined. And so that's a big thing. Are you an owner or you're not an owner? So assuming you're not an owner, that's not necessarily bad, but then the question becomes, if you're not the owner, you are a creditor. And the question then becomes, so how is that credit, how is that backed with actual gold or silver backing that system? So assuming it's a fully backed, maybe you can say fully allocated, but allocated, you see, it's a term which is sort of open to interpretation. Fully backed, maybe it's a little bit more straightforward type of system, where if you have $100 worth of gold, you have you got $100 from customers, you have to have $100 worth of gold. And the question then becomes, if it's on your balance sheet, are you keeping these bars purely for your customers, or are you using it for something else? So in the industry, for example, a lot of companies, bullion dealers, they would use it as an inventory. So they will take these bars and just selling it to customers as they need. Because if you know our industry, you need a lot of inventory in order to operate. So it's really tempting to just use a customer bullion, because legally you can. There's nothing illegal about it. It's actually your bullion as a bullion dealer. You just owe somebody something. So So it might be used as inventory, or as you are aware with bullion banks and so on, it's a practice of leasing it to other entities, which might even be selling said bullion, right? So there's so many issues involved with the leasing of bullion and the encumbrance of somebody else's bullion, which becomes problematic. So they have to be looked into. And unfortunately, a lot of people don't know how to look into it or how to ask these questions. But that's one of the problems with fully allocated sort of systems. Then if they're not fully allocated, you go into partially allocated, where you get $100 from clients, maybe you only have $2 or $3 worth of silver. Then you have to have a way of how to handle it if there's more redemptions coming, or maybe you don't allow for redemptions, right? And then ultimately there's just the paper. So there's a lot of things happening in the industry, and there's a lot of terms being thrown around to confuse people. But one of the few things to remember is if you want to be an owner, you have to have a serialized number of these bars that you own, and you have to have an invoice showing that it was actually sold to you as a physical item. If you have those two things, you're an owner. If one of those are missing, you're almost certainly a creditor.
Yeah, I think some of the problems we're seeing in the industry, I think one, it is a big education piece. And like you said, making sure that you own specific serialized bar or coin, that it's either in a segregated tamper-proof bag or storage area that it's audited. That gives you full legal ownership to it. I think a lot of what we've seen that's been happening over the last year are customers that are told one thing by salespeople and may even be told something by their customer documentation, or their customer documentation is missing key terms or it's not complete. And so they feel as though they're being represented as full owners and they're not. That's one issue. The second issue is, like, if we go back to the Perth Mint, where you have statements by the CEO that say, we have all the metal to back our positions, and then you look at the financials and he's blatantly lying. And an auditor like myself and a CFA like Daniel can prove that out, that he's blatantly lying. Now, whether he's lying on purpose or not is a different discussion, but it's a lie nonetheless. So
he doesn't even know.
Yeah,
sometimes
he may not know. And in a situation where you don't have that serialized number, you're not the true owner, and it's either allocated or pull allocated, whatever word you want to use, but they're utilizing that metal for something, working stock, or they're leasing it out. In the case of Perth, it's not working stock. We proved that on their balance sheet. It's actually leased out. Then some people are taking that and what I call financializing the gold and the silver and turning it into a derivative and earning interest on it. Then you have the two things. You have the price risk. Well, three things. You have the price risk of the metal. Two, you have the counterparty risk of the other person on that transaction, which now has a financial relationship, a derivative relationship for that metal. And third, if we ever get into a shortage, like if we have another financial crisis and the gold or silver can't be found, could you even get the metal, if they had the money to repurchase it? And so it's not just the problem of how the customer is being represented. It's later on what they're actually doing with the metal. And the schemes are getting more complex, Gregor. And that's something that we also need to educate people on, is just what you said. If it's any sort of pooled or unallocated where you don't have that invoice and that serial number and those audits to show that it's actually your property, this scheme could keep going on forever. I mean, they could figure out new and interesting ways of using your metal and creating more risk for you, the customer.
And there's a perfect example of this. I believe it was a class auction lawsuit against Morgan Stanley. I don't know if you're aware of it, back in the 90s.
Yes.
Which was exactly about silver. This Morgan Stanley was saying he was holding silver for a customer by ounce. He was being told it's a vault. One day the customer wanted to have delivery of it. He said, "Oh, no problem, we'll pay you some money." He said, "No, I want to have the bar." And they said, "There's no bar." And since the customer ended up filing a lawsuit, class action lawsuit, he ended up settling out of court with him. But during the court time, the way Morgan Stanley defended itself was saying, "Oh, it's industry practice. We're not denying we don't have the silver. Everybody's doing it." That's what they're saying. And that was, as I read through that, that's kind of what caused me to sort of say, I need to start from square one here and build a different system, because We're trying to get away from this counterparty risk when this financial system is going to go into trouble. And ownership of precious metal is what can you protect you against it. But when most people buy these derivatives and these IOUs of IOUs of IOUs, you're sort of kidding yourself. You're buying a price exposure, but you're not getting any protection at all. So we for the last decade, we've sort of been, being out there and trying to, tell people about it, what you have to watch out for. Because another issue that's blatantly being lied upon is insurance. You might have heard the term, all risk insurance. So when people say, oh, is my gold and silver insured? And people say, oh, don't worry, it has all risk insurance. And people think all risk insurance means all risk covered. That's not what it means. All risk insurance means all risk covered unless it's not covered. It basically means unless it's excluded, which means that it's a storage contract. And it's not, it's a bullion dealer who does this, but it's a vault storing it, which has the insurance. They will have a list of exclusions. And so the exclusion might be very extreme, but it will still be called an all-risk contract because it's just a technical term meaning all risk included unless excluded. If you don't know your list of exclusion, you don't know what you have. And so, that was one reason why we ended up setting up our own vault back in 2013. We are now storing about $800 million worth of gold and silver for clients, so it's gotten really quite sizable. But it's Singapore dollars, so about 500 plus US dollars. We had to get our own insurance in order to cover, in this case, mysterious disappearance, which we thought was really important to cover. But it's another example. It's the same thing where people are being made to believe something which is not true. And most of the times, the salespeople don't know any better. So it's not like they're trying to. The salesperson trying to lie to you. They themselves thinks that means it's all covered, and so you just have this roundabout, of things. What you really want to make sure is that you own the metal in your name, and you want to make sure that you have decent insurance with it. And since the other thing we always say, you need to make sure it's real, which is why you have the bullion genuinity guarantee. And lastly, you want to try and make sure you don't hold it in a jurisdiction which is likely to nationalize it when things turn bad. Those are 4 things, to worry about. And that's basically what we've been focusing for the last 12 years on making sure as much as possible that we have the best solution out there that we can build.
So it's really, at the end of the day, it's buyer beware, and buyer has to do their own due diligence on the product. Don't necessarily trust what your salesperson tells you. They may not truly understand it, may not have all of the information, and you really need to look for those things that you described, and making sure that you're the legal owner and that you're dealing with a reputable company that's being audited by a reputable party that's in a jurisdiction in which has the appropriate laws in place that's going to protect your rights to that metal should you ever need to exercise those rights.
Yes. And another big factor we found in this industry is, our customers are almost all private individuals. And the reason is that these are the people which really care about these sort of facts. But if you talk to wealth managers, a wealth manager doesn't really look into these things. A wealth manager is just going to buy what everybody else buys. So if everybody buys the GLD, he will recommend the GLD, because if the GLD goes down, who could have known? Right? It's like the subprime crisis. Who could have known? I mean, everybody should have known because it's kind of obvious, but you basically don't get into trouble. But if you're a wealth manager and you recommend something which is different, for whatever reason something goes wrong, since they feel you want to be blamed. So you have this really strong, always recommend what everybody else buys. And so oftentimes, it really takes a customer, and it takes a bit of research and a bit of work on understanding counterparty risk to really protect yourself, because you're not going to get that protection oftentimes if you ask somebody else to do it for you, unless that person really, has some really strong intentions to try and do that.
Can you tell us a little bit about your products? I'm going to put your website up on screen here. Just tell us what you offer for your clients, and how clients can get comfortable with the products that you have.
Well, if you want to buy silver and gold, basically you can click. Oh, maybe just go down a little bit.
Sure.
Yeah, you can see here, for example, these are some of the most popular products. It's a 1,000 ounce LBMA good delivery bars. So each one of this is 1,000 ounces, which makes it about $26,000 per bar. You can see we have 180 of these in stock right now. So as a company, we own around 650,000 ounces of silver outright. So if you buy from us, we are showing you we have 650,000 ounces. We have so many of these bars, so many of these bars. And say you want to buy 100 bars, we only have 60. What we will do is we'll create two invoices. One will be purchase of the 60. And the other invoice, we would lock in the price, you will pay us. And with the next shipment, we will send basically close that invoice and you'll get the other 40 bars. And that's another indicator which will tell you whether you truly are an owner of something or not. Because when you go to some fund and you're buying $20 million worth of gold or silver, chances are there aren't $20 million worth of physical metal lying around there. And yet it's being credited to you. So how can you be an owner of something if it doesn't exist? Because oftentimes they have to order it and it has to arrive. So there's a time lag. So you can see the way we operate essentially is we show our inventory and you can take delivery directly or you can store it. There's just two different modus operandi basically. If you store it, we are just adding a service, which is storage. And maybe one thing, if I might add it, we had a number of customers which asked us to had gold with us, and they asked us if we can take a loan against it. And so we, after about 1 year of going back and forth different options, we actually came up with a pretty successful way of allowing people to take loans against their own bullion through a peer-to-peer lending system. Maybe if you want to show it real quick. If you go to the website and you go to loans, yep, and maybe about, you will essentially find that you can take the bullion that you're storing with us. And by the way, you can transfer in your bullion to us. We would actually go through a DAX testing, which means we'll make sure it's genuine and so on. And then you can take a loan against it. And if you go down a little bit, you will see the statistics below. We did about 250 million Singapore dollars. That's about 185 million US worth of loans. If you go down a little bit more, we'll see the summary here. And you can see the last 10 contracts that went through. So today, for example, 22nd of June, we had just had a loan going through for $104,000 for a duration of 1 month at a rate of 375. $16,000 loan. These loans can be anywhere from $3,000, which is the minimum, also way to $900,000, $800,000, $900,000 and so on. And the interesting thing with these loans is you are not getting the loan from us. Instead, you're getting it from another customer. If you go to P2P loans, again on the menu and you click on market for a moment. Yes, the menu P2P loan. Yeah, perfect. Yeah. You can essentially see a market where people are posting the lending offers and some people are posting what they're trying to borrow. For example, the 6 months USD borrowing request here. So somebody offering with requesting to borrow 950,000 US dollars. He's as a collateral behind of 172%, and he's offering to pay 3.5%. And on the other side, we have somebody offering $6,000, $375, and you can see that, says a matching one at 425. So basically the borrowers and the lenders, there's a price discovery mechanism where they sort of set their own price. And if you click on view on the borrowing request, real quick, it's on the left. Yep. You can see the details of the loan. Now, because we track everything by parcel, you can see here that 950,000 US dollars are being requested. So it will be an interest of $1,662. Our fee will be $237, which is 0.5% of the loan. But the interesting part down here is the collateral. And you can see that this amount is basically split in these different bars. And you take the bar, say 5385 over here, you have a parcel value of what, $26,500, and 13,834 will be the loan you're taking about it. And if you click on it real quick, on that parcel, yep, or either on this one is fine as well. Then you actually get the photo of the parcel, and you get an event history, and you can see the insurance data and so on and so on. So that just gives you an idea of the level of trackings that we do. And what's different about this parcel is owned by the customer himself. And he's putting that report up, and he's saying, here's my gold bar based on spot price right now. It's this update every 30 to 40 seconds or so. The value is $23,900, and I'm wanting to take a $12,000 loan against it, or whatever it is. And it basically allows you to take a loan and unlock value out of your bullion. So it's very different from the leasing of gold that we were talking about earlier, because in that case, it's not the owner of the bullion, the customer doing it, but it's the dealer doing it, oftentimes without the customer knowing, because the gold is on the balance sheet of the dealer. In our case, that gold was sold to the customer, and the customer is actually doing the loan, and another customer is giving the cash to make that loan. And the reason nobody else is doing it this way, as far as I know, we've been running this for 6 years now, and nobody has ever tried to copy it, is because it only works if the owner is the customer.
Mm-hmm.
Because otherwise, you have to be a financial license in order to take a loan. And the reason we can do it in Singapore is because we are not aggregating things. Because we don't have aggregation of multiple parties' interests, we are just acting as an escrow in between. And so, it's basically a consequence of having our customers be owners. Now they can sell private property and basically getting a loan from another customer, with us being the custodian who makes sure the money comes in and we are forwarding it to the other party. And we have a number of ways to make sure that essentially it's a very safe kind of thing. And because it's very safe, the interest rates are low. So most peer-to-peer systems out there, you normally hear like 9, 10, 11, 12% or so. For us, typically the average loan is about 3.5% or so.
Mm.
Because
so basically prevailing rates for the most part, because that's about what you would see mortgage rates here in the US.
And we have a lot more lenders and borrowers, which is also unusual. Because it's a very safe sort of system. So, I guess in some ways, we're a bullion dealer. We own the vault, so we're fully integrated. I don't know if you're aware, but we just bought a 180,000 square foot building, and we are creating a 15,000 ton vault capacity out of it. It's probably the largest silver vault worldwide. That's about 482 million ounces of silver to be able to store. So 3 times, what JP Morgan is rumored to have.
Mm-hmm.
So we have all of this, but we also have a software development arm, which basically, myself and 4 other colleagues, we basically develop these sort of systems to sort of create, usability out of it, while still giving the customer that full protection of being the owner, getting the best insurance possible, and having the genuinity guarantee, because we test the bullion using ultrasound, electrical conductivity, X-ray photography, density tests, and magnetics. That's the 5 tests we have. We always do 3 tests in the bars.
Okay.
So,
Gregor, if people want to contact you, if they have questions about your service before they engage you, how can they reach you and your team?
Well, you can, you already showed, basically you go to the website, silverbullion.com.sg, and you can just send us an email. You can either go to the contact form, you just send us at sales@silverbullion.com. You can click on opening an account, there's no cost to it. And we also have a lot of resources on the website where we explain why we're doing things different and why, and we're giving it, say insurance certificates, and a lot of transparency about things that normally companies are not willing to give or don't really want to explain or go into some detail. So we really like customers who ask a lot of questions,
Mm-hmm.
which is unusual, but it always helped us. I'm strange because I like auditors. I like people to look.
You may be one of the few that likes auditors, Gregor.
Very few, because the way I look at it is, if I'm getting somebody who's interested, to look at it, and his feedback might allow me to build a better system, a better mousetrap. So I guess there's a certain passion behind that, and a certain just desire to build as good a system as it can be, in view of what I think, or I'm quite certain to happen, which is a systemic crisis. And I don't know when it's going to come, or how it's going to come, but I'm pretty sure this decade we're going to see some fireworks at some point.
Yeah, I agree with you. Thank you so much, Gregor, for joining the program. Thanks for your clarity as to what ownership actually means and your view on the markets as well. We appreciate it. We look forward to having you on the program again.
Yep. Thank you for having me.